Sunday, April 20th, 2025. I hope you're all having a wonderful Easter. Before we dive on into this, do me a favor and smash up that like button and hit the subscribe button as well. But let's go ahead and get on with the show. So the supply pyramid, Bitcoin is the best money humanity has ever had. This is just a reminder. I'm sure many of you already know this, but fiat currencies like the US dollar, they are infinite, especially recently with excessive amounts of money printing. Gold is a good alternative to fiat currencies. It is scarce. If you've ever read the Bitcoin Standard talks about how long-term, over thousands of years, gold has been able to retain its value because it has an average annual inflation rate of 2%. That's pretty much the reason why gold is worth what it is. There's enough of it to go around, but not enough of it to dilute the supply. Gold is a phenomenal alternative to fiat currencies. And then, of course, we have Bitcoin, which is fixed. 21 million Bitcoin will ever exist. I remember the first time I ever heard that number. That is the very first thing that got me into Bitcoin. And my goodness, what a ride it has been. But moving on, another reminder, if you don't believe me or don't get it, I will try to explain it to you because this is very important. 1 ounce of US gold in 1933, they actually raised it to $35 in 1933, but it was $20.65. 1 ounce of US gold coin in 2025 was at the day of this post $3,334. Quite a difference between the two. And is this a negative statement about gold? Absolutely not. It is a negative statement about fiat currencies. As much as I love Bitcoin, as much as I love gold, my hatred of the dollar is what has driven me to cryptocurrency and in particular to Bitcoin. But moving on, how about an incredibly bullish post? I've started following this guy recently, Mr. Crypto, and man, you would be hard pressed to find somebody who posts more bullish content than he does. Now, I don't entirely agree with everything that he says, and I'm not going to say that I agree in particular with this chart. It's just another tool. There are some compelling arguments that he makes. I am unconvinced, but here we go. Golden cross. A golden cross in what? So golden cross on global liquidity. So whenever we have a golden cross on global liquidity, in the past at least, Bitcoin has exploded. You see a golden cross in 2018. In the bear market, the beginnings of the bear market, 2019, Bitcoin went up 139%. That bear market rally, golden cross and global liquidity in 2017. So this first one was 2016, excuse me, I have my dates off. So 2017, golden cross and global liquidity started to rise, 2,200% gain. In 2020, another golden cross in global liquidity. Bitcoin rose by 1,190%. And so just recently, we had a golden cross. And so what does that mean for Bitcoin? Maybe that means that we're going to see a significant gain. If this one was 2,200%, this one was a little under 1,200%, maybe this one would be like 550%. I don't know. Am I a believer in that? No. Is it something to pay attention to and at least keep in the back of your mind? Sure. Yeah, let's go ahead and keep this in the back of our minds. You could see a couple other golden crosses throughout history, at least one other one. So here's one that he didn't highlight because we went right back down and had a death cross in global liquidity. When was that? That was towards the end of 2024. But then, Bitcoin's price did rise after that. So, hey, maybe Mr. Crypto is right about everything and he's right to be as bullish as he is. Here's another reason to be bullish. Every time credit spreads blow out, Bitcoin followed with strength. And so what is a credit spread? Credit spreads are an options trading strategy that allows you to profit off of the downside. How about I'll just keep it at that? I could get into more specifics as to what the deal is with that, but credit spreads, you profit to the downside. And whenever you see a spike in credit spreads, that means that too many people are too bearish at a specific time. So maybe this is one of those examples where people are too bearish in the stock market, too bearish on Bitcoin, and we have a rise moving up ahead of us. As always, it's one of these things where I want to share this information, these charts that I'm seeing that stick out to me on X, while not necessarily agreeing with everything that I say. Could this be the beginning of a huge upward thrust in Bitcoin? It certainly could. Does that mean that this has to happen? Absolutely not. So, okay, moving on. Hard landing, soft landing, no landing. So global recession alert, a net 49% of 164 investors with $386 billion in assets under management believe a hard landing is the most likely outcome for the world economy, according to a B of A survey. This is a massive shift in sentiment as 83% expected no recession in March. So quite a difference. What a difference a month makes. Now, where am I in this? I am in the camp that I do believe that we're going to have a hard landing. And after that hard landing comes a panicked response by governments around the world, by the Federal Reserve, and we'll see about what that other side looks like. And I have been of this mindset that we were going to have a hard landing since 2022 when we started raising rates. And so we started raising rates. I looked at historically what happens when you raise rates. Well, you rally when you raise rates, and then you rally when you pause, and then you dump after cutting rates. We first cut rates in the United States on September 18th. It usually takes within 0 to 12 months for there to be a recession. I believe that we are in a recession in the United States right now, and that we are going to have a hard landing. There's lots of data points that I could share. I know that Jerome Powell is mostly paying attention to the unemployment rate and paying attention to inflation. But in my opinion, there's lots of other data sets that he could be looking at, but he's, I guess, is choosing not to. I don't know. But moving on, another reason that I think there could potentially be a hard landing is this Zillow forecast for metro level home price change between March 2025 and March 2026. So Zillow, I can't even begin to describe you how extremely rare this is. Zillow is bearish. Zillow is bearish. They don't have an incentive to be bearish. Okay, that's the significant thing about this. They want you to think that housing is booming at all times. But Zillow just flipped bearish on housing and now forecasts U.S. home prices will fall 1.7% over the next year, with New Orleans and San Francisco leading the way. Just last month, Zillow predicted home prices would rise this year. So this is brand new. So worst offenders: New Orleans minus 7.6%, San Jose minus 4.8%. We have Austin at minus 4.1%. We have a couple of positive ones, including Hartford and Rochester, but by and large, it is mildly lower. Lots of action going on in Florida, but mildly lower over the next year. That can't be a good sign. All right. Just rocky remainder of 2025 is my general thesis. And then I think for Bitcoin, at least, that 2026 is going to be a lot like 2023, which, if you remember, I would say 2023 was my favorite year of the last 4 years. And so let's just get through this year. 8.5 months left. All right, next we have from Pomp himself, Anthony Pompliano. Trueflation shows inflation is 1.36% today. I've shared a similar chart. I've gone to Trueflation myself. He says real-time inflation has been crashing since tariffs were announced. Tariffs are deflationary, not inflationary. The Fed should be cutting now. Now, the reason why I saw this, I wanted to include this, is not at all that I agree with Anthony Pompliano's assessment. I would not say the conclusion that tariffs are deflationary is correct. What we have seen since the tariffs have been announced is an adjustment that has caused prices to not come down, but to not rise as much as they have in the past. To make the conclusion that tariffs are deflationary, I can't believe I'm going to say this. I might want to beware of lightning striking me here soon, but I tend to agree with what Jerome Powell said at his most recent speech, in that there's going to be a short-term effect on tariffs. But, inflation, true inflation, is definitely lower than what we're seeing from the CPI report, which is another thing that I'm like, oh my goodness, am I going to get struck by lightning? So should the Fed be cutting now? I don't know. I don't know about that. In general, as an Austrian economist, I have a mindset that the Fed should not be creating environments of cheap money and of whatever else, but I will acknowledge for our short-term gains, we would be wanting the Fed to cut, short-term being like within the next year or so. Okay, moving on. Weight of top 10 stocks and top 11 to 50 stocks in the S&P 500. This is really fascinating to me. The market concentration bubble has still a long way to go. The top 10 stocks market cap share in the S&P 500 is 37.7%, near the highest in 60 years. The next 40 stocks market share is only 22.8%, the lowest on record. Not even the 2000 dot-com bubble saw such a concentration. And so we can see the dot-com bubble, it was actually more in favor of the stocks 11 through 50 versus the top 20. We actually really haven't seen anything like this since the 60s. So we've seen things like the Magnificent Seven go off on a tear, while stocks 11 through 50 have been declining in their share of the market. This is something that I addressed a few days ago in the fact that if you think about the so-called bull run of 2022 to 2025, let's just call it that, what you would see is that in stocks, it's been mostly led by the largest companies, by the so-called Magnificent Seven and a handful of other ones. And then in crypto, it's been led by Bitcoin. And then, in November of 2024, we saw a lot of ISOs play catch up from what we saw from the SEC suit suppressing the prices of those ISOs in 2021. But really, other than that, there just has not been the level of breadth. And so you ask why there hasn't been an alt season. Well, it's because we have an appearance of a crypto market, of a stock market that's been on a tear, but really it hasn't. And that's especially visible when you see the stock market priced in gold, which peaked in 2021 for the S&P and the NASDAQ, and 2018 for the Dow Jones Industrial Average. We have been at least priced in gold in a bear market since then. And everything that we've seen with the stock market rallying and looking like it's almost vertical, that's really just from a handful of companies. And I tend to think that those companies are going to underperform moving forward, that there's been a lot of fear in the markets over these last few years. And so what have people done? They've been putting a lot of their money into the top companies, and it's made it look like that a lot of money was flowing in the markets, but no, it was just really the top companies. And same for crypto. It's mostly just been in Bitcoin. And so we'll see where this goes from here, but I'm not a huge fan of the Magnificent Seven over the next several months. But moving on. Foreigners, this is a little bit of a fear tactic, I will say. Foreigners selling U.S. equity funds, inflow to U.S. equity funds domiciled in the rest of the world, weekly versus 4-week MA. The blue line right here is the 4-week moving average. You can see it going down pretty significantly. And then the light blue line, the light blue bars here is actual flow. And you can see 2 straight months of outflows from foreign equities. You might be surprised to know that this is mostly coming from Europe, that actually in Asia, we're seeing an increase in money that's being put into equities. For some reason, there's an outflow in Europe. And so we'll see how that plays itself out. But I would say a lot of what happened over the roaring 90s leading to today was a lot of foreign money coming into the market for the first time. And so, again, I don't think this is anything to be too scared about. But if we were to see all that foreign money leave, that would be pretty catastrophic for the stock market. Nothing to really even be a little bit nervous about as of right now. All right, last thing here. Sorry, I forgot that this was the last one. Elizabeth Warren just now on CNBC. I have an affectionate name for Elizabeth Warren. I like to call her Satan's sister. But Elizabeth Warren just now on CNBC. Trump should not be calling for Powell to lower rates and say he wants him fired. This is hurting the nature of democracy and will ruin the stock market. Also, Elizabeth Warren 8 months ago, Dear Chair Powell, we write today to urge the Federal Reserve to cut the federal funds rate, currently at a 2-decade high, by 75 basis points at the FOMC meeting on September 17th and 18th. Given the Fed's confidence in inflation moving towards its target of 2% and data indicating slower job growth, now is the time to swiftly move forward with rate cuts. And so she was calling for a 75 basis point rate cut. She wrote this on September 16th. A day before the Fed governors got together, and she got a 50 basis point rate cut. So it's interesting. I tend to think that the Federal Reserve is unbiased, and not that they even paid attention to Elizabeth Warren. I tend to think of the Federal Reserve as unbiased in one regard, that they are out for their own interests above the interests of the Democrats or Republicans. But this kind of hypocrisy, it's just something that really turns me off to politics in general. And I see a lot of it coming, especially from people like Elizabeth Warren. But anyway, okay, that is all I have for today. Again, I hope you have a wonderful Easter. I will most certainly be seeing you in another video. Peace.